During an exam, the IRS can contact third parties to verify information. Think employers, banks, neighbors, or employees. But the Taxpayer First Act tightened the rules. On the EA exam, they love the phrase third-party contact because it triggers notice requirements, specific timing, and a taxpayer right to see who was contacted. Under the Taxpayer First Act, the IRS must give advance notice of its intent to contact third parties. The notice has to be sent at least 45 days before the first contact, and it must state the time period the IRS plans to make contacts, which can exceed 1 year. That 45 days plus 1 year window is prime exam material. So who counts as a third party? It's basically anyone other than the taxpayer, an employer, bank, customer, vendor, or even a neighbor. The point is, the IRS is gathering information about the taxpayer's tax matter. One nuance: IRS Chief Counsel has said contacts with other governmental agencies aren't subject to the TFA advance notice requirement. That's an easy trap answer. Now the exceptions. The IRS doesn't have to follow the notice and record rules if a pending criminal investigation is involved. Also, no notice if giving it would jeopardize collection or if it could lead to reprisal against someone the IRS contacts. And if the taxpayer already authorized the contact, the advance notice requirement doesn't apply the same way because you already said yes. Finally, record keeping. The IRS must provide the taxpayer a record of the persons contacted. That can be provided periodically, or the taxpayer can request it. On the exam, watch the wording. The right is to a record of who was contacted, not necessarily every detail of what was said. And remember, the record requirement also drops away in those key exceptions, especially criminal investigations. Ethan's tax return is under examination. The IRS wants to ask his employer questions related to Ethan's tax issues. There's no pending criminal investigation, and there's no evidence that contacting the employer would cause reprisal or jeopardize collection. Before the IRS contacts Ethan's employer, what must the IRS do? Options include mailing a statement of legal rights, giving reasonable notice, getting written permission, or getting a search warrant. Think about it. The correct answer is, provide Ethan with reasonable notice of the contact. Under the Taxpayer First Act, the IRS generally must give advance notice before contacting third parties like an employer, unless an exception applies. A tempting wrong answer is written permission, but the IRS does not need the taxpayer's permission for third-party contacts, just the required notice.